Everyone. Welcome to yet another weekly analysis. First of all, we're going to do a recap of what happened last week. A lot of things happened last week that we may not have had answers to, but I've been saying the same answer, I've given the same solution every time. I said what you have to do is wait for the DXY to get to its area of interest before you start selling. You know, let's just see where the market is headed right now because we're obviously bearish on Euro USD. We are bearish on the monthly time frame, structural wise, right? Structural wise. The only thing is that we're just, you are just reacting off of, a midpoint. That's the difference, right? We're reacting off of a midpoint right here, bearish engulfing, but we are bearish structural wise. The only way Euro USD becomes bullish is when we break this structure right here, right? When we break this structure right here, then we become bullish. On the weekly time frame, we've obviously had a double top, and we all know when you see a double top, not just a double top, but when you see a reversal pattern on a higher time frame, it is more than likely to hold, right? When you see a reversal pattern on the higher time frame, like the weekly time frame or the monthly time frame, 9 times out of 10 it is going to hold. It is going to do what it's supposed to do. So Euro USD, we've been trading off of this level right here from the daily time frame, but Euro USD now we are very much bearish, right? Very much bearish. Not only that, we've had a pullback into the neckline. You see what I'm saying to you right now? We've had a pullback into the neckline. These little things, right? They give us more confluences, more confidence in selling. You see what I'm saying to you? Most people were buying, but it's fine, to each his own. So Euro USD, right? Having this pullback into the neckline gives us confidence to look for more opportunity to sell. Now, if I take the Fibonacci level, my Fibonacci from swing low to swing high, we will see that we are right where we're supposed to be, right? We are right where we are supposed to be. So from here to here, right? You can see that we are right in the golden zone. So that's very good. That's enough confidence for us to muster to be able to start looking for sales. Now on Euro USD, we are still bearish on the daily time frame. Now the problem is this, right? A lot of people were getting in, but it was too early, right? But the problem is the DXY tells us when and when not to get in. I've backtested this a million times. If I tell you should do something, if I tell you this works, trust me, it works, right? And now you may have noticed, that the DXY, got in around in Thursday or whatnot, right? But we were still hanging on the real USD. But anyway, what I'm trying to say is this: if you have a level on the DXY, you've plotted out your area of interest, you should wait for the DXY to get there first. The DXY tells us what's going to happen. If the DXY refuses to move, nothing's going to move. I've been saying this, and I'm saying it again. The DXY is the dollar index. If you're trading the US dollar with any other pair, you should look at the DXY. Just take a look, right? See where it's headed. 9 times out of 10, the Euro USD or the GBP USD, they may tell you something different, but the DXY will give you a concrete evidence of where the market is headed. You see what I'm saying to you? So focus on the DXY. Let it be there. Let it be beside your bed, beside your pillow, underneath your pillow. Let it be there. Hold it because it is very important. I didn't know this at first. I had to take a series of losses before my mate told me try adding the DXY. And then I focused on the DXY and I found out that it works. The DXY works. So wait for the DXY to get into its area of interest and then you start looking for buys. But in USD, we're selling. So right now on the DXY, we're in there already. Right? We're in there and we're looking to execute on the Euro USD. It's as simple as that. For this week, I'm making this video just to show you when to execute. Right? That's all I'm doing right now because it's the same thing we've been saying since last week, right? We're waiting for the market to come into 1.6000. It has done that. But we're going to wait for a break of counter trend and the break of structure. We're going to wait for that, right? On the Euro, on the 1 hour time frame, right? Because you can either execute on the 1 hour time frame or the 4 hour time frame, whichever suits you best. But I would advise that if you have structure on the 4 hour time frame, draw your trend line on draw out your trend line on the 4 hour time frame and then go to the 1 hour time frame to look for the entries. Because the higher the time frame, the higher the structure, the stronger the trend line and whatnot. So on Euro USD, we have a double top. Yes, we do. We have a double top, and I'll show you like so. Higher high, it came in here, putting a higher low, and it came in here putting a higher high, and then we've broken it. a slight close, a body close below or a body close above, makes a structure. So if we zoom in right here, we will notice that with body close below, right now we're just having a pullback. So I'm saying we're having a pullback into, to create a lower high and then possibly create a lower low at the end of, by the beginning of next week, right? So right now we're having a pullback, lower high like so, and then possibly a lower low, and then we can start looking for sales when I get an entry off of the neckline. And that's all I'm waiting for, right? That's all everyone should be waiting for. If you're trading, the way we are, trading on here, like turn analysis, higher time frames and whatnot, we should wait for the EUR. I'll say it again. Wait for the EUR to break the trend line. This trend line came off of the 4-hour time frame, and you will notice how it's respecting it from on here, right? You can see you pin bars. We're rejecting and we're using it to go up, right? So you might have gotten in thinking, oh, it has given us a reversal pattern, but two things has to happen. In trading, we talk about waiting for confluences. You have to wait for confluences, two or more. You hear them say, make sure your support and resistance touches two or more areas of interest. Make sure two or more. It's important because with trading, you need to have evidence. You need to have more confluences. You need to have reasons to execute. So if I need to see two or more, confirmations. So for me, it's a break of structure and a break of counter trend line. A break of structure could also be replaced with a reversal pattern, and that's enough. But we must break the neckline. We must break the neckline, then a break of counter trend line, and that's enough. When I get that, I execute. Now you may be thinking, oh, I'm just talking off of what somebody else might have taught me. But yes, I have a mentor, but even at that, I still had to make mistakes. I still had to look for what works for me. You see what I'm saying to you? So you have to do the same. I might be telling you, wait for a break of connection and a break of structure, but it may not work for you, right? Your psychology or your personality may not fit it. So you have to, make your own mistakes and then look for what works for yourself, right? But that's all for this week, right? And I hope and I pray that we all follow our training plan. I followed my training plan. That's why I was able to, avoid losses this week. I haven't taken the trade for the past 2 weeks because I haven't found an opportunity. But by the grace of God, this week we're all going to take trades and we're going to make profits. So have a great weekend. Have a great week. Ciao, ciao.